Let's talk about what you're hearing right now, Brian, because I don't think anybody else has a better read on how things are going in real-time data. What are you seeing right now just in terms of consumer spending? I know you said yesterday that for Memorial Day weekend, consumer spending was only down by about 10%. How does that match up with what you've seen over recent weeks?
Sure. Becky, if you think this is a healthcare crisis, as you see various adjustments by government authorities to the healthcare crisis and the human crisis, you're starting to see the economy come out of the hole. So if you think about the months during the year, we started off strong this year with spending January of last year to January of this year up 10%, 9%. February was 10%. March was 7% as the impact of the virus came. April was 27 to 30% down. And what you're seeing in May is 5 to 10% down. And so you're seeing us come out of the, out of the depths of where we were in April, and that's good news. And that's due to two things. One is just people are starting to spend more money as the stimulus hits generally, and then more importantly, in terms of the numbers moving faster, is the impact of the opening of various economies.
I would assume a lot of that has to do with how Americans are feeling about their jobs. So many have been furloughed, so many have been laid off. Now, many of the people who have been furloughed think that they will be called back. Do you have any kind of insight into whether these are temporary layoffs, whether these are long-term? And I bring this up because Jason Furman was with us yesterday, and he said he thinks unemployment will still be around 11% come Christmas time.
Yeah, I think most economists have the unemployment numbers peaking somewhere during this quarter and then starting to fall, but stay elevated through year end and even into next year. And our economists at Bank of America have the same take on it. The interesting question is what's been very different in this situation has been the shutdown of the economy was immediate, and it was parts of the economy which never shut down. For example, doctor's office or dentist's office, things that just generally go on in a recession-proof, as they call it. So we went into a recessionary environment, and these people shut down. They're reopening, and that's good news. So that'll bring back parts of the economy. It'll be slower for travel and things like that to come back. Some of the retail spaces, I know you ran a spot on Disney opening up. You're starting to see people open, but it'll be slower on those parts of the economy than it is on parts of the economy that are in strong demand. A doctor's office or dentist's office for people with delayed appointments, that they'll go back out and start going to dentist again. So I think you have to think about the unemployment impact. The real difference, though, is the amount of stimulus that's gone in to the economy is much different than in past crises. And so if you look at our customers' checking balances, say under $5,000 and under average balance that they're running before the crisis, they're actually up 30 or 40% in average balances in their accounts today versus 12, 13 weeks ago. That means that the stimulus is still in their accounts and it's going to be spent, and part of it's been spent, but there's more to come, and we'll see if that stimulus can hold on long enough to the reemployment come back in and the confidence continue to build.
I think that's part of the question, though. What happens when some of those stimulus measures run out, when some of the unemployment benefits run out, too? What do you think on that front? What would happen, let's say, around August if some of those measures are no longer continued?
Well, that's going to come back to, the American economy especially is driven by, consumer spending. And as you think about this, it's going to come back to this question of the consumer spending picking up and the demand for services, and especially in the service side economy picking up, and as we move through the year, and how fast we can cross that river to where there's enough spending to reemploy the people. So I think, that's going to be the debate. If you think about the stimulus that's in the economy, we think basically, as best we can tell, there's still about 30% of the EIP payments in our customers' accounts that have not been spent. The unemployment benefits, have been strong, and Congress and the administration put in a strong benefit. That ends at the end of July. Whether they do something again, we'll have to see play out over the next few weeks. But, there is an issue that, in terms of currently the cash flow is strong. The unemployment numbers are very high and very concerning. But on the other hand, as spending picks up, that'll help drive the economy back to where these people will get jobs back, and we'll see this play out. There'll be a tension how long it can last, and does it last long enough? But right now, it seems to be sufficient.